Welcome back. Many Canadians have debt. Of those, many have more debt than is considered a reasonable amount. Doug Hoyes is a licensed insolvency professional and co-founder of Hoyes Michalos. Thanks for being with us, Doug.
Thanks, Amanda.
So let's start with this question of debt. We know we have a lot of it. We went into the pandemic with a lot of it. We've seen our savings rate tick up slightly. So I'm curious to start with whether you think Canadians are a little bit better off as higher rates have kept us from borrowing more.
I don't think so, because we're borrowing a lot more. So you're right. The savings rate is slightly better, than it was pre-pandemic. Obviously a lot lower than what it was during the pandemic. I think the reason for that is there are two different economies. There are the people who are doing well, who are able to put money away, who've seen their assets go up in value. They're doing fine. And the people who do not have assets that have experienced any kind of growth are the ones who are resorting to debt. And obviously living expenses are way higher. So if your income isn't keeping up with that, you get a problem.
So then that gets us to an important distinction, right? We talk about good debt and bad debt. And of course, the more likely you are to have assets and income, wealth, the more likely you are to have, if you have debt, it's so-called good debt. Make the distinction for us. Which is the kind of debt that's okay to have and which do you not want to have?
Well, to me, I guess it's good debt if you can pay it back. But I would agree that borrowing for a vacation is probably not a good idea unless it's a really important vacation. Whereas borrowing for a mortgage, if the house price goes up over time, then you've leveraged that debt into an increasing asset. But as we've seen, there are a lot of people now, as interest rates have gone higher over the last couple of years and real estate prices have not necessarily kept up, even that good debt on their mortgage, that investment property they bought, is not necessarily good debt. So if you can't pay it, it's not good debt.
And of course, can we agree that perhaps the worst debt of all is credit card debt? It's very high in interest rate, and it doesn't fluctuate. It doesn't come down when rates come down. It's just always high.
Well, I would say payday loan debt is even higher than that and even worse. But yes, Canadians have a massive amount of credit card debt. We've got way more credit card debt now than we had before the pandemic. And you're right, those interest rates aren't fluctuating every time the Bank of Canada drops by 25 basis points. So it is a very expensive form of debt and something you want to reduce if at all possible.
And of course, as you noted, and we've been seeing now for a few years, affordability is a big issue. Is that going to continue to impact a whole bunch of people's ability to handle their debt and save for the future?
Yes, I think absolutely it will. If your paycheck is going up by 3%, but your expenses are going up by 4 or 5%, you've got a problem. So unless you can find a way to increase your income or dramatically reduce your expenses, like, you stop eating or something, it's going to be a problem. And again, this is something that affects people at the lower income levels, not the higher income levels. And that's where I think the big danger zone is going forward.
And so I want to make a distinction between, there are obviously very vulnerable people who are not buying anything extra, and to your point, sometimes do go without things they do need because they can't afford it. Then there are wealthy people at the other end of the spectrum who can buy what they like. Is there a group in the middle, I'd put myself in this category, who probably consume more than we need to? In other words, you spend more, we could spend less, but it doesn't feel that way. We're sort of used to consuming. We're told we should be able to buy things. Do we need to rethink what we can have in order to do better on our savings and investings?
Yes, I think so. And particularly if you're doing that consumption with debt, then obviously that's a red flag. But yeah, take a look ahead at the future. If I'd like to retire someday, or if I want to buy a car or a house, how much cash am I going to need to do that? The only way to build up cash is to spend less than you make. And so you got to take a hard look at what things you can cut now. You're right. For some people, there's nothing they can cut. Their paycheck takes up all of their rent and food costs, and there's nothing left over. But if you've got any excess at all, or if there are places to cut, now's the time to do it, because every dollar you save obviously builds up to a lot more in the future.
Thanks so much, Doug. Appreciate your time today.
Thanks, Amanda.
Doug Hoyes is co-founder of Hoyes Michalos.